Good morning, traders and investors. I know you guys have a lot of theories about the markets, such as when I take some time off, the market tanks, or when Dennis takes some time off, the market goes crazy. Wrong. Quiet week, one of the smallest weekly ranges we've had in a couple months. What does that mean? Well, we'll find out. Boeing settles to strike. Spirit Airlines not dead yet. Earnings, Tesla on Wednesday. I'm sure we'll talk a little Tesla today. IPO market, hot or not in 2024? What's going to happen in 2025? We will find out from Eric Croll at 8:35. We got a full crew Monday pre-market prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, traders, starting out in the red, we are building all kinds of resistance up here in the lower 5,900 handle. Exact double top from Friday, a few other highs. Maybe Goldman's right. Maybe the decade is over and we're going to not decline, but just not have the same returns. We'll talk about that. The buck up 14 cents, 103.45, still holding on to the majority of the gains. TLT, I mean, they're telling you, man, rates are not going down 78 cents, 93.09. Crude doing the old dipsy doodle at the $70.80 area, up a buck 49, 70.18. Gold, iron 3,000, up 1860 at 27.49. Silver, high ho silver, that's up almost a buck in the 34 handle. That's a big percentage move, almost 3%. Bitcoin, big rally last week, taking a little bit of a breather. That's down 445 and 68,340 after 3 days of no triple D. He's going to make his appearance back on. And Dennis, how's the vacation?
Windy. Learning experience. Don't go to the Bahamas in hurricane season. I just dodged that one. The one was down there, and I was like, ooh. Actually, when I was going down, I saw the tropical storm. Bring AB in here. I saw the tropical storm brewing down there. Looking, I was like, it's going to go south. They're going to be okay. And then they're like, oh, it's going to break up. It's not even going to hurricane. And then I was sitting in the pool yesterday down there, or 2 days ago, I guess it was down there. And some couple Michigan people come down. I was talking with them, and they're like, oh, we just got in, and there's a hurricane warning. I was like, what? I'm like, it's a hurricane warning. Yeah, Hurricane Oscar. Oh, it formed? And now for the Bahamas. I was like, oh, for us, like, no, southern Bahamas. But anyways, I think we got the outer rim of it. Like, so we were getting wind, basically pelted with wind for 3 days straight. So it was a windy vacation, but still got some R&R, had some fun, met some people. So it was all good. All good.
All right, let's bring in AB here. AB, how was your weekend here? Downtown, things happening downtown?
Weekend was good. Yeah, I mean, downtown Detroit still busy. People going out, people out at the restaurants, people out at the bars. People were out for the Lions game yesterday. Big win for the Lions. Now the leader in the NFC North. You know, the game started a little slow. I think the Vikings got up 10-0, and the next thing you know, the Lions, the Kitties came back. Dan Campbell's got the boys firing even without Aiden Hutchinson, so that was good to see. And yeah, I mean, excited for the week here. Excited to be back at full throttle.
Let's get into it. Let's get into stocks because we don't want to get into football because football, we know talk hockey anymore. Hockey's dead. So stocks. You guys got to inform me this time because I've been out for 3 days. So tell me what happened last week. It looks like nothing happened.
No, absolutely nothing happened. Like I said, with the one of the, I'll do it on this this bottom right chart, and I'll make it bigger just to illustrate. Look at that weekly range. You see that weekly range right there? That was from last week. Well, actually, this is probably started. Yeah, last week because this is a daily here. Just a tight range. Consolidation here. We just, we hit a high on midweek, and then we just couldn't get back up there. What saved the market last week is looked like we're going to be a little bit weak midweek, and Taiwan Semiconductor came out, and they're like, oh man, we're making so much money, we're raising guidance. that push Nvidia to a new all-time high. That kind of offset the ASML. I don't know if that had the disaster before you left.
Yeah, I was going to ask about that too.
Right when I was leaving. So
Yeah.
I think it actually happened like right before I got on the airplane during the day that day. So yeah, vicious.
Yeah, so seeing some separation here in the chip world. I don't follow this company very closely, but it's just we're consolidating up here near highs. And if you're a technician and you have a trend, and a trend is higher, and you get consolidation, then you wait for the breakout of the consolidation. You wait for a catalyst, and really don't have I mean, what, Tesla? I don't know if we want to start out on Tesla, but that's our big earnings report this week.
Yeah, if we're just looking at the week and looking at the earnings calendar, Logitech tonight, Nucor tonight, these little cyclical in there. Texas Instruments tomorrow, General Electric tomorrow, 3M, but nothing really jumping out and saying, whoa, that's a market mover. Wednesday, Tesla's report is the one that stands out. That's going to be a market mover because lots of people obviously, look to that as an AI company, and they look to that for tech. They look to that for autos and everything too. So Tesla's going to be a big report on Wednesday. IBM also reports Wednesday. Boeing, which we're going to get to in a few minutes because they did the deal, they report Wednesday as well. Thursday's UPS, LUV, AAL, so some airlines. But really this week, besides Tesla, is a pretty quiet week. Now, we know next week we're going to get into it. But this week, you could almost call it the calm before the earnings storm.
All right, couple things.
Sure.
About Tesla.
Sure.
Jeremy was on Friday. Jeremy Newsom was our guest host. And
Newsom?
he was
Yeah.
Yep.
Oh, nice.
Yep. Yeah. He moved out to California.
Did he?
Yeah.
You can't keep up with that guy. He's everywhere.
I know.
Yeah, he's everywhere.
He said a couple interesting things. One, if the Qs hit 505, he's completely 100% cash, selling absolutely everything. That's what he said about the overall market.
What's the number he's looking at?
505 in the Qs.
Oh, so it goes up, he's selling more. He's selling everything. Everything that's not nailed down to the floor. Okay. And that, because he thinks we're going to do the old July dipsy doodle. Also, he's not bullish on Tesla going into earnings. What he thinks is it's not going to be a great report. It's going to drop to 200, and then he's gonna back up the robo truck and get ready at 200, and then that boom. That is his setup in the market, and that's his setup in Tesla. Lots of thoughts on Tesla. And when you sit out for 3 days from trading, you can really kind of, get a feel for what's, sometimes I don't have a day trading feel, but you get a better feel for like what people are talking about. And obviously when I'm like going on my Twitter feed, it's all election. Everything is about the election here now. It's Trump versus Kamala, and it is like intense. And there are opinionated people who are heavily opinionated. One thing to consider is most businessmen, most businesswomen try to stay out of giving decisive political views, and for a reason, because you don't want to cut off half your customer base. The thing that scares me the most and has scared me the most about my Tesla position isn't valuation. It isn't that this company isn't doing some amazing things. It isn't that I don't think they're going to solve FSD. The thing that scares me the most and has continued to scare me the most is what Elon Musk might potentially say. He's just so decisively Trump that I'm just scared. I'm very scared. And chat, you can help me out with this too. I'm very scared that he's killing off half of his customer base, if not more, because I think the Democratic voter are more likely Tesla drivers than the Republican voter. So I just get scared. I was talking to my buddy Kappel last week, and he's got a Tesla, but he's like, I can't stand the stuff he's saying because he's a Dem. So I get it. I try to, obviously everybody gives some opinions, and, you give some opinions on politics. But for the most part, CEOs stay out of it. And I'm just scared that he's so into it that a lot of Democratic people who buy Teslas may not buy a Tesla, and maybe they're going to sell their Tesla. I don't know. That's the concern to me. He's just so Trump right now that I'd like to see him. You can give political views somewhat, but just the bandwagon and cheer. Not saying I'm against Trump, not saying I'm for Trump, not saying I'm against. I'm just saying as a business person, it's usually better to stay on the sidelines to a certain extent. So this scares me, folks.
AB, I'll let you weigh in.
Yeah, I mean, I agree 100% with you, Dennis. And I was saying a lot of that stuff. I've not when Musk endorsed Trump back in July, but like whenever he first started getting more, political on Twitter, on X.com, I was saying the same stuff because you look at what regions where people are buying Teslas, and it's in California, it's in New York, and places like that. And so I guess the one thing that you can say, though, to the flip side of that is even if Tesla's car sales decline, a lot of people are buying the stock for other reasons besides their car sales. And so, we've seen their sales decline in the cars right now in the automobile business, and the stock stays elevated in valuation because people like the, full self-driving or the Optimus,
the potential,
or the energy storage side of the business. So you have all these other sides, but I was saying that part too, that like, the state governments and stuff that are going to be more likely to sign the deals for the, energy storage side of the business and the other things, and to pass the regulatory for full self-driving, like it's going to be reliant on some Democratic lawmakers as well. So I think there are a lot of potential issues here with Musk doing that. But he's the richest man in the world. And a lot of times I think people like that can feel like they can do whatever they want. And that's what Elon is doing right now.
Well, and he has said before, remember the David Faber interview on CNBC, he said, if I lose money because of what I say, so be it. That goes for your shareholders here too. So I'm concerned on the report as well for those reasons. I have written some calls against my Tesla shares, somewhat of a hedge, holding some long-term core position, no doubt. But I'm extra shares. I've been extra shares for a bit. I'm a pretty heavy position Tesla. I believe it's my biggest single stock position. Do I want to take it down to an average size stock position ahead of the report? I don't know. I've written some calls, so that probably helps to hedge me to a certain extent. I think the expected move is about $16. Again, I'm not saying I love Elon Musk's brain. I think the guy is a genius. I think his accomplishments are second to none. What he does, to catching the rocket, to, what he's done, even where FSD currently is unbelievable to me. His accomplishments are amazing. I just get scared that he is just too in bed with this, a political view so strong that he's cutting off some of his buyers. And I think it's a serious concern.
Technical comment, fundamental comment.
Yeah, talk to me technical.
It's just tight. Look at this.
Tight like a tiger.
Oh my gosh. Yeah, the other thing that Jeremy recommended, and I don't know, if there's a way that you could do it to, not pay up to the premium gods, but, a strangle here, that we very rarely recommend. I don't know what you'd have to pay for like the 240 call or the 200 put, but it's not going to stay here. It's not going to stay at 220. No,
it's waiting for earnings.
Yes.
It's sitting here waiting. It needs more information. The stock is telling you it needs more information. We want to know, how are the earnings looking? Do you have any projections? Are Musk's political views starting to show up with the buyers? I don't think it will on this report. So maybe you're safe away from that on the report. But I got to think, there's a few Democratic voters out there that are saying, nah, I'm going to stay off Tesla because I'm just pissed off at what he's saying. Does that get forgotten? Maybe. If Trump wins, like just say scenario analysis, if Trump wins, is Tesla better positioned now because he's obviously so in bed with who's in the White House? Maybe there's an argument there, and Trump is way ahead in the polls right now. Well, it's a controversy as well. Some people are saying Polymarket's rigged. Some people are saying these polls aren't as good. So there's all controversy there too. And we're not a political show, and we're not going to try to go
it doesn't
one way
make
or
a lot of
here.
sense because the Republicans are drill, oil. So
is he hedging himself, Joel? Is this a hedge?
I don't know.
Like he knows he gets the Democratic buyer usually anyway, so he's trying to win the Republican buyer. Is this the strategy behind it all? Or is it no strategy and he's just very politically, in line with what Trump says? We know, like the reason he's pro-Trump is probably because Trump is, more anti-government, more like shake things up, fire people, do stuff. It's kind of how, Musk goes in there too. We know when he went into X, cleaning house, firing people, and trying to just do, business as it is. I mean, he's kind of anti-government. He is anti-government, and Trump is more anti-government than Harris for sure.
Couple
Harris,
good comments here.
Yeah, please.
Johan says it's political. He should be playing both sides of the market.
I think he should be playing both sides.
Yeah. Also, someone said, "What about Mark Cuban?" Mark Cuban's out. Mark Cuban doesn't have he has stakes in companies and everything, but
but he's not
he's not selling a consumer product.
He's not selling consumer product, and I know, and then we can move on after this. Dennis, you make all these, these comments. He's a genius. He's doing all these things. I think that there's a lot of other things that he could be using his influence for that are a hell of a lot more important in this election. And that's what makes me, disappointed in him. I think there's other ways that he could be using his influence besides the election. So let's move on to Boeing. Looks like Boeing settles that strike. That's trading up on nearly $5. Give us that Boeing news.
Yeah, well, we've reached a preliminary agreement, Joel. So I wouldn't go as far to say that the strike is officially over, but Boeing shares are trading higher after the company and striking machinists reached a preliminary agreement to resolve the 5-week strike. Members will vote on the proposal this Wednesday. So pending that approval on Wednesday, this strike could be over. The market thinks it's a good chance it happens. Boeing's trading up about $5 here, 3.13% here. And I don't know. I'd have to assume this vote goes through. I think people, that have been on strike for over a month now, and you're starting to see the effects of it. And they came out with a 35% pay increase. I think they'll go ahead and approve that in the vote, unless, we start hearing differently before that the strikers were asking for even more. But as of now, it looks like the deal is going to get done on Wednesday.
So, and you get the pop. Obviously you're going to get the pop on it, but I still look at this company and I think, wow, what a mess. Now wages are going up on you, certain parts here too. You're burning cash left, right. You got to do offerings. You're probably doing another offering here yet. I don't know. Did they do one last week? Did they officially do an offering? Because they did the mixed shelf. Did they officially come out with I don't know where, because I've been away for a couple days and I don't look at Boeing regularly when I'm on vacation. In any regard, the stock is popped.
No details on that.
Yeah,
I believe.
Seller exhaustion in the stock. Clearly that was very bad news that we had last week right before I left. And the stock went up on it. So when stocks start rallying on bad news, it's seller exhaustion. The question is, if they shove another big offering down investors' throat, stock probably gets hit. I tend to think this is still more of a selling opportunity. Stock is in a clear downtrend and the company is a mess. Doesn't make me want to go all giddy and say, yeah, Boeing, the bottom is in. Because whenever you think the bottom is in this stock, they find another headline, or something happens with a plane or this or that. It's just a massive place for negative headlines.
It's a nice pop, and if you've been playing off the triple bottom there, there was a good formation. It's just like when you kind of cheer for the stock, because it's a big part of the economy and tied to the airlines and travel and everything. So you got a nice move here. It's been a trading range here. It hasn't really touched 160 very much. You got the 4 a.m. traders got excited. They took it to 162. There's really nothing on the dailies to say, hey, that's a great level. So if you want to sell it at 160 to 162, I think you're going to get your opportunity early in the session, trading up in a weak market. But I think if this is one of those days you're looking for $5, $8, $10 move, well, you already got a $5 move, but $10 move off this. I don't know if that's in the cards today. Let me look at my trusty data window to see where that actual double top is. Now there's nothing up here. Oh, 162. No, nothing. 161, 162 area. It struggled there in September. Let's see if we can get back up there today. First thing you need is a strong 160 bid. Don't have that right
What's
now.
The catalyst to drive it? Now that the strike is settled, what's the catalyst to drive it? We saw this with Ford as well. When they settled the strike, it's now we're going to go. And you know what? It popped after, and then it just kind of has been going nowhere for the last 3 months. So I just don't see the catalyst to drive this higher here. And all I see is potential negative catalyst still, especially if they shove another offering down. Company's burning a lot of money. It's really tough story. Long term, maybe Boeing's okay. Maybe I say, because they've done everything wrong. I mean, even NASA, is like leaning away from Boeing on stuff now, going with SpaceX. Not that that's a huge business for Boeing, but it's a chunk. And I mean, it's a statement from the government saying, hey, Boeing, get your shit together, for lack of a better word. And they just are struggling to do it. And it's going to take a long time to turn the story around. You got to be very patient if you're in this for the turnaround story.
All right, staying in the airline sector here, we did have some news on Spirit Airlines, ticker SAVE. Someone came in and tried to save here. Spirit Airlines shares are trading higher after the company extended its debt refinancing deadline. So, Spirit was up against the clock for this debt refinancing, got an extension on it. The stock actually traded up to $2.40 what was that? Last night? No, that's on Friday.
Yeah.
Last night, they get overexcited there, AB,
wow.
and they think, oh yeah, buy, and they rip it from $1.50 to $2.50, and then they're like, oh yeah, it's still SAVE, and it's still got a lot of troubles here.
Yeah, it's been sold back up to around $2. So yeah, Spirit Airlines, you've got trading up about 37.5% this morning, 55 cents on this news, on this extension.
I just make a lot more money, and I think this is for most traders, buying good stories and strong stocks as opposed to trying to buy bad stocks and bad stories. And that's what SAVE and Boeing, that's all part of the same thing. I mean, you just think about how strong this market has been. The turnaround story, everybody likes a good turnaround story. Everybody wants a good turnaround story. But they're the toughest things to trade, and they're the toughest things to time. Sometimes the stories turn around, sometimes they never turn around. But you just see the stock, and it's just a disaster, and they're teetering with bankruptcy. And they're going to get some help here now. Maybe they're not going to go bankrupt, but maybe they are still going to go bankrupt. There's a lot of things to worry about here. I let it be somebody else's worry. I don't need to worry about this. I have enough worries. I don't need to worry about SAVE.
Okay. All right. A couple things here. And we talked about this last week or when it had the big dip. It's like, what are you doing at $1.50 on something? Are you shorting it? Oh yeah, I got $1.50 on the bone here. This company is worthless. They're going under. No. I mean, if anything, and not for a long-term trade, but you look at it, and say, well, if I buy X amount of shares here at $1.50 and it goes to zero,
call option,
then I lose. Then I lose my money, right? A lot of people are probably just in for that for the trade. Even some hedge funds or big traders. Look at the volume this thing trades. It trades monster volume. They're like, hey, let's get long 5 million SAVE, and if it goes up to $2, who cares if they're going bankrupt? We'll unload it. And I think that's different kind of traders. So man, that big old pop to 250 here. Wow. 251 to 50 cents off that. Huge percentage moves here. I'm just looking at this $2. If there's like hope for this company and things are going to come through and they're going to get refinanced and people are actually going to, I mean, their seats are so small. I don't know who builds their airplanes. Dennis, remember we flew back from New York that one time on Spirit? I mean, basically, I don't have the
widest big front seat. That's why they sell the big front seat.
Yeah. So let's see if we can establish a strong $2 bid. I mean, too bad they didn't let this company get. I mean, JetBlue, we talked about that. I mean, the merger. I don't know. Obviously, that's off the table. No one's going to go back to that. But let's let's hold those gains. I'd love to see it go back to 250 for shareholders. But right now, let's see if you can even hold a $2 bid. Right now, it's a battle of the algos there at $2.
Better stories out there. Lots of better stories. And there's a couple good stories here. Let's go to some good news here. Boeing, Tesla.
All right, we do have
still to be determined.
We do have some activist investors coming into Kenvue, ticker KVUE. That is Starboard Value has acquired a stake in the company. So KVUE shares are trading higher, up more than 8%. I'm trying to get the exact, let's see, 9.5% stake potentially. Let me try to get the exact numbers. Kenvue shares are trading higher. No, I don't think we have the actual number. Either way, this is the company. It was a spinoff of Johnson & Johnson that, owns the brands for Tylenol, Listerine, Aveeno, Neutrogena. So a bunch of major consumer brands here. Kenvue is a $40 billion stock here. So major investment coming in from Starboard Value.
It's the Tylenol stock. I'm very surprised it's up 8% on this, because this is not a stock that's going to run 20, 30%. This is like not a huge turnaround story here. It's a surprising activist position here, because I don't even think the company, obviously just spun off, and it's not like it's been in the gutter. It's been doing okay. I'm actually in shock that it's up 8%. If this was like a stock that was really beat up and like a name, that is activism's really going to help this company, then I could see the 8% move. But I don't see how activists coming in and Tylenol maker is really going to shake up everything and like do different things. Oh, we need Tylenol, more Tylenol for everyone. I don't get it. I think the algos just naturally buy anything that Starboard buys up 7, 8%. I think they're overshooting on this one. If I was on KVUE, I would actually sell it today.
They make Listerine too, Dennis.
Listerine and Tylenol. And they got a couple things. But these aren't like huge growth engines, turnaround things. These are staples. This is something that people just buy. I buy Listerine. I buy the Tylenol, Advil, Tylenol. Everybody just buys that stuff. You're going to buy more? Can Starboard come and, shake everything up to make consumers buy more Tylenol and Listerine? I don't think the activist position makes any sense at all. 2350 is a good area. And 2350, Joel.
Look at that. I know.
It's a nice spot to sell. That's the highs. Man, I actually almost think about shorting this.
That's a good point.
It's scary to short when Starboard's going in. Scary to short. But my thought process here is sell.
My thought process here is that they bought this for a fundamental reason. This election is going to be giving everyone headaches.
Everyone headaches and bad breath. That's what it is. We need more Tylenol and Listerine, because everybody's going to have headaches and bad breath after this election here.
They'll be staying up all night watching the election, and then, and then they're going to then they're gonna have night breath or whatever. But no, that's my joke for the week. But all I can say is that 2350. Dennis and I are not your super guru technicians or anything, but when we see 1, 2, 3, 4, 5, 6, 7, 8, 9 highs in one area, a pretty good volume here. I mean, if it catches a 2350 bid, okay, go ahead. Then Kenvue is going all the way back up. But I like that level.
What an area.
And for me, I say, well, man, someday let people forget about it. Let it whip around today, and then maybe it floats back down to $22 or something, 22 and a quarter. I'd be a hell of a lot more interested at that level than now.
Makes no sense to me, the Starboard position. So I'll take a hard pass on the buy and interested in looking at the sell side. Next.
Dennis, so one thing that you didn't necessarily miss, but just continued while you were gone, was the hot nuclear trade. So I don't know if you saw, if you look across the board, Oklo trading up again this morning, up another 3.5%, is now at like $18. Wow. Probably when you left for your vacation, this was like a $10 stock. Dennis, now up to $18. And you go to any other basically name in this case,
CCJ, which is huge Canadian.
Yeah, ticker SMR, nuclear or New Scale Power Core is up to, let's see, 18, also around $18. I mean, this whole sector has just been ripping higher. The trade is really hot. My concern, and what I want to ask you about, I mean, and I know you're kind of more of a day trader too, though, is like a lot of this stuff, when you look at the companies, they're years down the road for when they're going to get these reactors going, when the next reactor after the one they're working on right now will be in the works is still going to be years down the road. I feel like I'll have an opportunity to buy these on a pullback at some point in the next couple of years.
I think you're going to get a better opportunity in some of these stocks too. And some of the smaller companies, get carried on story a long ways. You got a small market cap company, their story can really carry them. And, and let them carry. I mean, sometimes, there's some good trades, when stocks are consolidating, breaking out. But if you look like an OKLO now, the time to strike was then when this broke out to the new high back 4 days ago, right when I was going on vacation. So you look at $11.29. When it took out $11.29, it's like, oh, we're on breakout here mode. Breakouts are working because we have a story here. When you're buying breakouts, You want a hot story to go along with it. So all the ducks were in a row for this back Tuesday when the stock broke out. Now you're looking at it 1880, you're like, oh yeah, it's gone. I got to buy this one. Now you got a lot of risk because heck, the stock could still be it could come back to 12 and still be in an uptrend here. So how do you control the risk at this point? I would say I've missed it. And then maybe you look to something else. But I'm not saying it can't go higher. I'm not saying it can't go lower, but I'm just going to say that the time to buy this was 11, 12, 13 on Tuesday, maybe even Wednesday morning. Now you come in, and stock at 20. It's like gone into rocket ship mode. When you're chasing stocks in rocket ship mode, sometimes they continue a little bit, but you don't know when they're going to sputter out.
Yeah, see, it's tough because I think Amazon announced something. I think you were gone. Announced something with this SMR. I believe that's the stuff.
So it's a news catalyst. Yeah.
Yeah. So, as long as these big companies come out and saying, hey, and I think Google did it too with another company. So, hard to be short of, right? And they're long. Just, for me, I look at this SMR and I think Oclo is probably a little bit more of a fan favorite here. We're trading up 60 cents. We did back off to high. You have a level now that you want to clear, 2064. But that's too far away. What I want to give you guys today is that close. That close on Friday, 1823. You're 80 cents above that. What could go wrong? Well, we'll see. As long as it holds that close, continues to make, closing highs, maybe wait for a little bit of consolidation, but 2064, not as important to me as that closing price on Friday, 1823.
And CCJ is like a bigger one from Canada. That's not one of these like smaller market cap. It's been moving big time too. Broke out from 50, but now 58. That's a big move here too. So same story. Nuclear player there. Again, sometimes just on pullbacks, you look to August, September, the double bottom, and you're like, the nuclear story isn't going away, and this gave you a huge opportunity back in September. It's continued to go since then. But now you look at a stock, it's gone from 36 to 58, and if you're not in it, I think you got to kind of say, I've missed it at this point in time, and you need a pullback. You get a check back to 50, maybe you're taking a shot at that point in time. But I believe the story is still intact. That's why it's not like just smoke and mirrors. Some of these stocks maybe be getting overdone. The nuclear story is not going away. The AI story is not going away, and this is another way to play it. But again, a lot of these stocks have just run too far for me now.
All right, well, let's get to our special guest of the day. We've got Eric Croll hanging out backstage. Without further ado, let's give Mr. Krull our special pre-market prep welcome and see what he's been looking at when we get back.
All right, Eric Croll, the co-author of the Life Cycle Trade, also Croll Asset Management. How you doing today, Eric?
I'm doing great. It's good to see you guys again.
Yeah, so I like when our guests join the show early, and then I see the smiles on their faces, or they kind of shrug their head. I got a little bit of both out of you here, but are you enjoying the show so far today?
I am, and you talked about one of my favorite groups I've been watching. Another recent IPO is Nano Nuclear, NNE.
Yeah.
Okay.
Yeah.
It's something I'm watching, but I agree with what you guys were saying about there might be better times to buy in the future. They're making big moves, all on news, and this Nano Nuclear, they make nuclear reactors that mount on the semi-trailer trucks. They can be moved around to locations. It's a great idea. They haven't sold anything yet. So I watch them. I can't buy a stock where they haven't sold any yet, right? But at least in my mind, I can't. And so it's trading on news, but I think it's a fun sector to watch. And it's definitely, I think, long-term good play. I wouldn't buy this stock now. I'm waiting, like you guys, I'm waiting for a better time. I want to see some news where people actually sell these things.
Okay, so waiting for a little bit more fundamental information here. All right, so I am going to I'm going to bring up. You always do a great job on the presentations here for us. So I'm going to bring this up and just right at the start, IPO activity, pick it up, but still lighter than prior years. What are we looking at, Eric?
Exactly. It's been a slow growth in the IPO arena. They're very small, but getting a little bigger. When I say small, when you look at that big bar in 2021, the average IPO raised $360 million. This year we're at 230 million, which is more than last year, which was 180 million. So the companies that are coming public are bigger. They're raising more money. We're still not anywhere near what it was. And when you look at that quarterly number on the right, the number of IPOs is steady and growing a little bit, but we're still much lower than we were years ago. So it's a cool market. I think and if you think about it, there aren't that many companies that we're waiting for to go public. If we were to sit there and just talk about like, hey, what are you waiting for? I can think of SpaceX and maybe there's a few more, but other than that, there's not really any marquee companies that I think people are waiting to see go public.
What about Stripe?
Stripe would be one that would be to watch, but there's just not a whole list of them. It's not like 3-4 years ago when we had, there's 20 unicorn companies, each worth more than $1 billion that haven't gone public yet. So I think it's kind of a quiet time, and maybe if the market continues to heat up, we'll see some bigger companies come out.
Do we have an idea if SpaceX is going to go like eventually here? And Musk doesn't tip his hand, but sometimes he does.
Sometimes.
Any thought process here? Could we see this in 2025, or it's probably out further than that?
I'm guessing it's out further than that. But if he makes any kind of announcement that would be coming out in 2025, I think there'd be a lot of excitement.
Yeah.
You think it's rates? You think what do you think it is? Is our country losing our innovative touch? We're just all going to rely on AI, and people are just not being creative. What do you think it is? Or do you just think that the SPACs, everyone got SPAC crazy and got smoked in that, and they're just like, hey, I'm done with this. I'm going to invest in real companies.
I think it's more the latter. I think after that SPAC year in 2021, where there's so many companies that went public through the traditional market and then the SPACs, and most of them got just crushed. I think there's a lot of people out there who are just gun shy. And when I think about lately, when I look at all of my stats on IPOs, the vast majority of them have gone down and undercut their IPO day one low. And right here, you just went right on perfect timing. You look at how many of them are liquid traders, more than $20 million a day, and it's only 13%. We used to, in general, it was like 28% was the average in the past. And, you're looking at only 13% of them are really only investment grade where institutional investors would even be interested.
What were the big ones this year? Like, I'm just having, brain. Like, I can't remember, like, some huge ones. It's like, because there's always
Kava.
Yeah, Kava.
Kava was the big one. Was that the big one?
No, Kava was not even this year. Let me. There's nothing really big so far this year. There was one.
Is that crazy?
That was I have to look.
We had ARM in 2022.
ARM was 2022. Kava was before that. Nothing that shows up on this list here was this year.
Nothing.
It's been a brutally quiet year for IPOs.
It has been, and I don't know why, but it's just.
Was Reddit? Chat saying Reddit, but Reddit was last year too, wasn't it? Was Reddit this year?
Reddit was this year. Reddit
was early, very early this year.
Yeah. Reddit was
back in March, right? I can look at the chart and see it was in March.
Yeah. And Reddit's one of the ones I'm watching. I like the way it's setting up a base right now. They don't have any earnings yet. That always bothers me. The sales are growing.
People like no earnings companies. They like stories. Just give me a hot story, and we don't care about the earnings.
That's what all the nuclear ones are right now. The modular nuclear reactors. They're all stories. But there just have not been any really good ones that stand out this year.
Looking at this top IPOs since January 22, the last column on the right, the 50-day average dollar volume you have measured there. So you have certain thresholds, right? That as far as that average daily volume. So looking at this, and you can explain the extrapolation here. I mean, how many are fitting that dollar volume criteria?
Like that other slide showed, only 13%. We look at $20 million a day or more, because what we found in the past is that the ones that tend to go on for big gains are the ones that are liquid. That's when institutions can get in them, and they're the ones who drive prices up over the long term. And so that's why we look at the $20 million a day. And that next slide shows these are the only ones since 2022 that trade more than $20 million a day and that are up 50% or more. I mean, if I extended this list down, you would see that there's not that many more that have gains at all. Like you guys were talking about Kenvue earlier before the show started. Kenvue is an interesting stock, that spin off, like you said, from Johnson & Johnson, but it's down 20% from its IPO day one close. So you're looking at a stock that trades a lot, but has not been a good investment. On this list, the ones I like are the ones I'm showing here are Kava, Astera Labs, and Reddit. Kava has probably been the best performer. They, again, are a restaurant that is expanding nationwide. And there have been a history of IPOs in the restaurant field that grow and grow and grow. This is like the Mediterranean Chipotle. And we all know how long Chipotle has been growing and continues to grow. You can go as far back as McDonald's. And, there's always been a history of restaurants that do well after the IPO. And you look at Kava, it's clearly in its institutional advance phase and continuing to advance. And it's a good stock right now that if you're in it, it would be a good hold. Astera Labs, they make they work with in the AI world, and that they make optimum efficiencies for connectivity for chips and things like that. I don't understand anything that they do. I'm not in the as chip expert or anything like that. But when I read about what they do, they are definitely involved with the AI world, and they are pushing efficiency. And we know how much power hungry AI servers are. And if you look at that, it's acting just like the way we like to see it. It came out, it made a little run, and then came down, undercut the day one low, and now it's starting to, in this due diligence phase, to hopefully form a base. And if I see that break out and break above the old high that's sitting there just below 90, to me, that would be a buy area. And Reddit did that already. Reddit had a really quick undercut of its day one low, had a nice run up, and then it undercut a little bit more and formed a base, and it just broke out last week. It's more of a V-shaped base, which are a little bit harder to trade. But Reddit looks like it's above the turbulent zone. It's above its all-time high, and looking like it might be beginning to run.
Do they all seem to do the same thing off the bat, though? They get the initial pop and all the excitement, and then a couple weeks later, they almost always seem to go down for a little period. Isn't that the case? And why do you think that is? Even looking at Reddit, you can say where it is now, but the first couple months for the stock were not good. The first couple months for Kava were not that great either. Eventually they turned it around, and these were the good ones. Some of them don't turn it around. Why do you think it is they come out, the hype and everything, and then is it just buyer exhaustion right after the IPO and everybody's excited, and then all of a sudden it's out there and people aren't as excited? Why always the hangover after the initial IPO?
The why is harder to understand than the what. The what is, you're exactly right. And, in our book, we've studied over 3,000 stocks, and we found that the vast majority, 91% undercut their day one low within the first 2 years, 55% undercut it within 3 weeks. So you're right. They come out, then they get hit and then come down. And then they form this institutional due diligence phase where I think institutional investors, for the next 6 months to 2 years, they wait for some earnings reports. And if they see that the sales and earnings kind of grow into what they promised, then they start to advance. And sometimes they go quicker, like maybe Astera Labs and Reddit. Maybe already institutions are saying, we trust what you're saying. It looks like you're growing. And they start to push the stock up. But there's the initial excitement, and then they all usually get punished. And then it takes a long time before institutions and other investors say, okay, we trust what you promised, and we see that you're performing. And in our book, we identified different patterns, and we named what kind of patterns those are. And we talked about the rocket ships, the disappointments that never do anything, the late bloomers, and and also, and now it's losing my mind here, but we came up with 6 different patterns of stocks and how they perform, and it seems to repeat over and over again what they do.
When does fundamentals matter? Just with Cava, like, you look at the stock and it's just relentlessly higher. And, the chat's saying, I didn't verify this, but Baloo Dog saying it's got a P of 365. And I've always said P's don't really matter until the growth slows. Once the growth starts to slow, then they matter because you don't have the momentum traders in there and the value guys are way below. But with Cava, I mean, we've seen this story before. Chipotle had the story so hot for so long. It's starting to come back here now, but 300 times earnings for a restaurant, it sounds scary to me.
It is. I mean, and I'm with you. I don't believe in watching PEs. Typically what happens is PEs just kind of show how much people are willing to pay. And it's a little bit more of like, if it's a low PE, people don't think the stock is worth very much. If it's a high PE, people think they're going to grow into it and they think it's quality merchandise. Yeah. And PEs eventually mattered and earnings definitely eventually mattered. But in the beginning, you should be watching more how investors are treating it, watch the chart pattern, and watch the sales growth.
Top line versus bottom line.
Yeah, and then see if they grow into it. I mean, how many years was it before Amazon even turned a profit? And Cava, you want to definitely see that the same store sales at the restaurants are doing well, and you want to see that they're meeting their growth numbers in terms of restaurant count. But I think right now what people are saying is this is a concept that people like. They actually are now positive earnings, which is good. It's high PE, but you have to pay up for a quality company.
Eric, what about some of these companies that have talked about IPOs? I don't know where they're at in the cycle at this point. Something like a Shein or a Skims, which is Kim Kardashian's, apparel company. I know there's been talks of IPOs for those companies in the past. Are they just waiting for a more favorable market environment? And if so, what does that environment look like?
That's a great question. I don't understand why. I think this year has been a good year for the market. I'm not sure why they're waiting now. It does seem to be a pattern, and I've noticed it over the years where after IPOs peak and the market peaks, there tends to be a 2 to 3 year lag before they start coming out again. And it's a little bit of a herd mentality. Maybe the companies that are not public yet and are waiting are looking for a name to come out and pop and continue to run. And then they start saying, now's the time. So I think it's a little bit of a herd mentality, and they're waiting to see an IPO that comes out and just takes off.
Eric, before we let you go, I just have to ask about two stocks. I don't think I've ever seen two stocks IPO around the same time, but have more of a divergence in price action. And the two that I'm alluding to are Uber and Lyft. Oh. And obviously, you've had one major winner, one major loser. Buying the laggard, definitely doesn't pay here. But I'm just thinking about this Uber and like the Expedia deal that they talked about. I mean, a company like Uber. I mean, and I know this is getting away from the IPO and everything, but a young company that goes through the battles, that goes through the the pandemic and builds, and now they build all this equity. And I hear that this guy was the CEO of Uber was formerly at Expedia. I mean, I just want to just talk about the divergence between those two stocks, and then just moving forward with Uber.
Years ago, you guys had me on the day that Lyft went public, or soon after that, and we talked about it. I think Uber is more diversified. They were better at getting into delivery of food and then other things to home, and I think they have a better business internationally, and they just seem to have a better management team, and they have their arms wrapped around the bigger concept of what they can do. With their whole idea of not only rides but delivery. And Lyft, it just seems like they can't get out of its own way. At least finally Lyft is making money. They have positive earnings for the last, looks like 1, 2, 3, 4, 5 quarters. And that's a good sign. But when you watch the stock, clearly investors and institutional investors are voting with their money saying Uber's the winner. And it is interesting to see how you think they're in the same business, but one's doing so much better than the other.
All right, we've been on the line with Eric Croll, Krull Asset Management, also the co-author of Life Cycle Trade, talking about the IPO cycle. I know it hasn't been busy, Eric, but I always enjoy your presentations. Thanks for joining us here on PreMarket Prep, and Maybe we'll get you on before year end if anything heats up. If not, we'll be dialing you up in January. Thank you very much.
Oh, it's always good to be here. And I didn't want to bring up the Illini beating your Michigan team for the first time in 17 years, but we finally did it in football.
The Galloping Ghost. But you know what? We're a basketball school. FAU. We look great. We got that coach Dusty May. We're gonna that Brad Underwood. We're a basketball school now, and we're not supposed to talk sport. No, I'm very worried about my football team, so we won't even go into that. But hey, you're feel free. I bring it up when we win. I can take it when we lose. Thanks a lot,
Eric.
All right, we'll see you.
Thanks, Eric.
All right, guys, that was Eric Croll again. Always great to
catch up. My comment might have pushed him to February. The callback.
He's a good guy, man.
He's a great guy. Love Eric. Love Eric, and everything. His analysis always makes a hell of a lot of sense too. Continuing the Uber conversation, I think we should do it because I was doing, when you're on R&R and you're like trapped in, a hotel in a windstorm, you do a lot of like just looking, on your Twitter feed and stuff. And I was like doing Tesla and looking, at Uber too. And the CEO was interviewed there over. I don't know who was doing the interview.
How do you pronounce his name? Dara.
I don't know how you say it.
Okay,
I can't say anything right. We're gonna throw that one to AB. Dara Khosrowshahi or Shui?
Yeah, I don't know.
Khosrowshahi, I think.
Okay.
My best shot at it. It's the toughest last name you're ever gonna get, like besides Dick.
Khosrowshahi. Dara Khosrowshahi.
But okay, so multiple times, obviously, we look here and we think like, well, Tesla's eventually going to eat Uber's lunch. But I was watching those interviews, and this CEO just knows how to run a company because, he does the deal with Waymo, and he's talking, and people are asking, about, Tesla coming in. Are they going to compete with you? If they eventually solve FSD, is this a major issue for Uber? And he's, all full on board with Tesla. He's like, the stuff that Musk does, I wouldn't bet against him, and he probably does solve it. But, what's fascinating is he talked about, like the potential of maybe Uber's going to partner with Tesla. So maybe just necessarily, maybe this isn't a bad thing. Maybe Tesla, if they actually do a Waymo and they partner up with Uber, they can offer the cars at a fraction of the cost as well. So like that's what we keep thinking is that you eliminate a driver. Well, all of a sudden, Uber's in big trouble. Are they, though? Maybe they still just keep their peace. It's just the driver that's in big trouble. So maybe there's a place for Uber and Tesla to live in peace and harmony together. Maybe, if Tesla does solve FSD, maybe it's actually not that bad of a thing for Uber. Different viewpoint.
Yeah, I mean, I think right now, Uber, you see just the divergence from Lyft in the space. And, Eric gave some good points about why that is, why Uber is so much stronger. But I think if you're betting that the economy stays strong, I think Uber continues to do well. I think the one concern is that if there is any pullback in consumer spending, I think Uber, obviously people are taking less trips, going to the airport less in that scenario, but also ordering less food delivery, which we all know is like super expensive. That's like one spot where I try to just not do at all because it's to me an unnecessary cost. You're turning like a $20 meal into a $35 meal after the delivery and tip. It's a huge premium to get that stuff on Uber Eats or DoorDash, whatever it is. Yeah. And Lyft, I don't think really has exposure to that at all. I don't think they have any.
I think they're just getting left in the dust. Like, I just don't think I think Uber looks at Tesla as an opportunity. And, if Tesla comes in FSD, if they teamed up with Uber, it's a little bit of like a death sentence to Lyft. And not saying that we don't know, there's no deals in place or anything. And again, Tesla's a long ways off. FSD for Tesla is probably, well over a year to 2 years off here. We know that, even the timelines from the Robotaxi event, which is why it obviously got hit. We're 2025 for a couple cities, but that's why late 2025, you're looking 2026. It's a ways off. And we can tell, it's getting better, but, you talk to people who use it, and like it's still a ways to go. So there's no imminent threat to either of these companies from FSD, but it could be a help for Uber eventually. And obviously Waymo, the partnership with Uber really helped the stock, a few weeks ago when they announced that. Maybe it was more than a few weeks ago. But I think that CEO is just really smart. The Uber CEO is just really smart. So we have 5 minutes.
5 minutes.
5 minutes.
Joel wants to talk some UPS. So UPS is trading
Sure.
lower after catching a downgrade from Barclays. So Barclays downgrades UPS to underweight, maintains price target of $120. The analyst says it faces stiff competition from non-union rivals, sluggish delivery landscape. Again, UPS taking a slight hit on this analyst rating this morning.
It's just a mess. Since they don't deliver Amazon for the last 3 to 4 years, the stock's a mess. Everything comes here. My Amazon random cars show up at my doorstep. I don't hardly ever see a UPS truck anymore. I mean, there's competition all over the place for this company. I think, the future is going to be like looking at, obviously FSD is going to be an issue, but drones, there's so much potential competition. This might be one of the biggest value traps out there. UPS might be one of the biggest value traps out there.
Oh boy, you hit a brick wall last week at the 136 area. So, if you're long to stock, you're looking for upside, man, until you can clear this 136.30 area, boom, at path of least resistance lower. You do have a pair of lows right at the area that you're in right now. So, if you're fading this, say, hey, they know what they're talking about. You're in the area of support. Always when you're trading down 235, you're always interested in the mark. But this is good enough for a horizontal line here and a long-term line, because not only did you peak here last week, but you also peaked in that area back at the beginning of October. So there's your major resistance. If you want to be a little patient here on a day trade or a scalp or something, multiple lows at the 130 area. You could definitely see that 4 lows from 130, let's call it 130 to 150. Naturally, when I look at a chart UPS, I automatically go look at FDX. And it had the earnings crush, battling its way back, trying to get into the gap. But we are coming into holiday season. I don't know, picking up deliveries. I don't know if people are going back to stores or whatever, but relative performance of these stocks has not been great over the last few years.
Sneaky rating is GE Vernova.
Oh, really?
Deutsche Bank starting GEV at a buy. The reason I say it's sneaky, it's not an upgrade, it's just an initiation with a buy. But a $354 price target is a huge price target here. Analysts talking about global leader in electric power industry, providing product services, generate, transfer, orchestrate, convert, and store electricity. This stock has just been an absolute monster. And it seems like when you do get positive analyst commentary, this stock can go a lot further than you think. It's only up 1% here today. I think the stock's going to challenge its highs here again. The trend is definitely your friend. It's been breaking out and going. And has there been a split that has benefited companies more than the General Electric one? Like, that is unbelievable. They all turn around. You'll obviously look, GE out of it. And then, and the other one was earlier. What was the other one? GEHC, GE Healthcare, which has done pretty well too. So, you talk about the turnaround, that really was the turnaround story. And it was GE. GE was the turnaround story 3-4 years ago, and they split this company up, and all the stocks have just been monsters since. Unbelievable turnaround for what was just a laughing stock of the market for years.
I wonder if you put all this together, like, where's it at? Because we look at that.
You gotta add up all these companies here now. It's starting to come back. Like, we obviously know GE, hit that high back, at $60 or whatever it was. I think it was $60 back in like 2000. And then, it was down at $10 before they started spinning off all these companies. I got to think a lot of these stocks. Now, again, GE did the 10-for-1 reverse split, I believe. So you have to consider that. So it would be 19. But then you got the GEHC, you got the GE Vernova. You start adding all that stuff up. Are you getting back near all-time highs from 20 years ago? Probably, maybe even higher. Did somebody do the math on that? Somebody in the chat do the math and add up all that stuff.
You got to be brilliant to do that.
See if we're back to all-time highs on GE, because I think we're probably getting close.
All right, well, that takes us to 9 a.m. here. Thank you to everyone who tuned in with us on this Monday. Tomorrow is a T3 Tuesday. We'll be bringing on Derek Oldensmith from T3 Trading. We always love our T3 guests here on PreMarket Prep. Good to have everyone back here, Joel, Dennis, and let us know in the chat again If there are any stocks we missed today, we can discuss them tomorrow. Any final thoughts?
I think you're just going to be a lot of chop this week. Obviously, not a lot of major earnings besides Tesla on Wednesday night. So I don't see this market just blasting off or nosediving here. You've got an election catalyst coming very soon. We're only a couple weeks out here now. So lots of things to look forward to here. But this week, I think, obviously you never know random news. Random news can happen anytime. But what's on the schedule here seems like it's going to be a little bit more of a quiet week.
I'd just say, I'm just looking at the ballpark, this for the S&Ps is 5,900 area. The all-time closing high is just above that. That nestled up with Friday's highs or Friday's close too. So I think the onus on the bulls this week is like to establish like a good bid, like 5,900. You got to buy 5,900 because we're going to 6,000. And for the Bears, let's let people let them sweat a little bit. Like we got 4 or 5 highs in the same area. It's making the market look like it did in July. It's making the market look like it did in August, and a little bit too much too fast. So that's it, Dennis. Glad to have you back here on Pre-Market Prep. Another great show, and we'll be back with you guys tomorrow morning.
Boom. All right. Thank you, guys. We'll see you guys tomorrow morning.